stuff, and people say they don't understand the things that we post on the levels and how it works and all that stuff.
Mm-hmm. All right, so I guess I'll start. So the objective of this is really not to go into details about things because I don't know, it gets kind of complex, but to kind of just introduce people more to the vocabulary and some of the concepts behind what me and Paul talk about, right? So not necessarily go into spot gamma itself because it's really just looking at the levels for spot gamma. He has plenty of videos out there to promote his services, but
Hey guys, can I ask a quick question?
Yeah.
Can I record this?
I don't care.
Okay.
All right. I was gonna throw this PowerPoint in one of the resource room, anyways.
All right, cool. Please.
There's probably better videos to explain this, Billy.
Yeah. There's a lot better videos out there. I'm just like,
okay, all right,
very basic things,
yep.
right? Shoot, I lost my train of thought. But anyways, so some people don't even know about market makers, right? And me and Paul, we talk about them a lot too. So if you don't know what a market maker is, they're pretty much a large institution that provides liquidity, right? Oh, also, if you guys want to ask questions, just jump in. I want this to be more of a open conversation rather than me just reading off some slides. If I'm wrong, feel free to correct me.
I say go high level because I don't see any introductory people in here. I think it's all our main core. So I say just keep it.
Okay. So some things people don't know is like market makers are obligated to buy and sell at a quarter price. And some people don't know this either, but they make money from the spread price, right? So they're not price sensitive. So if they need to hedge, they just hedge. They don't care what price it is. And for the market makers, they try to minimize their directional risk, right? So from doing that, they do that through delta hedging. All right, next slide.
You guys have it. You guys have it. Yeah, I think this is going to go long. I think like we can cut. I think we can jump through these, Wally, if there's like more like new people. So I just want to kind of recap it so we can get straight to specific trades, right? So basically, I'm not sure you guys want to argue. The point is like market makers is always delta neutral, right? And what Wally's saying is so what we believe is options drive the market more than anything else, right? And market maker is probably how they position can move the markets. That's what a lot of bull traders believe, and that's the people we follow believe. Like by knowing how the market makers are positioned, you can see how much movements you can get and support resistance goes. I'm not sure. You really have to believe in that sentence to follow to kind of go with this system. If you don't believe like options drive everything in this market, and market makers control most of the market, then you would not agree with what this is saying.
I mean, so if you think about it, market makers pretty much have unlimited money, right? They got that cheat code where they could just do whatever they want. so they're the ones that really move the market, right?
Yeah, but they're not doing it to win. They're doing so like basically they're doing based on what these guys are doing is they're finding how the market makers are positioned, and by seeing a abrupt so when, like for example, the two things we track is their gamma, which is they're either positive gamma or negative gamma. So by like just in short, by knowing just those two things, right? We'll post every single day. There's a thing that has a bull trigger. If it's above the bull trigger, it's positive gamma. So what it means is if we see a lot, so dealers go against the position, right? So, but in negative gamma, which we're in right now, if you see a lot of puts, it accelerates the movements in each direction. So that's how when we're listening to Zone Scanner, by knowing we're below or above these levels, it helps us kind of decide how much volatility there are and like which direction to go when we see these flows come through. So like it's not like for sure, like what I mean, it's just like one way to look at how volatility is coming into play, but there's no 100% on any of these things. But it's just something that we look at. that we post every morning. So, any questions on that part so far?
Mhm.
Do you guys even agree with it? Like it's not like a consensus thing out there, but it's growing. It's a growing consensus of a lot of people who are trading that's what's happening behind the market. That most of these moves is due to positioning, not. And when the catalyst comes in, it pushes it. Is that too much for you guys?
No, I'm following. Can I ask something? What's the with the max pain like per week? How does the gamma and that the max pain?
You
So
were kind of breaking up.
He said, well, it's like a max pain, right?
Uh-huh.
So like, so but the thing, so people always see that, right? Hey, they'll look at OI, all that stuff, right? So those things, so they have an attraction level, right? A lot of people think like, hey, you see a big OI, like for example, you see like Tesla 1100 calls, right? People think like, hey, if there's like 1100 calls, dealers don't want you to go over 1100 because they have to pay out. That's untrue. What it means is as it they don't try to avoid. There'll be like a pinning by 1100. They don't care if it goes above or below it. But once it breaks 1100, they will have to start hedging on the way up. So it accelerates to move past 1100. That's the theory, right? So a lot of people who look at those OI thing, like I know I hear John says a lot. John's like, oh, there's too much. Oh, there's too much people here. They won't let you get to it. But dealers is not really fighting with it. Dealer is just going with you. If it goes over 11, they don't care if it's going above 1100 or below it. They let people force that action, right? So someone has to do it. So that's what like you see like Spot Gamma posting some of that stuff. Like he's been tracking all those Tesla trades, and it's been dead on. So that's just one piece of it. I think there's a lot to it. I think Zong is just asking us to kind of introduce you guys just to like that school of thought that we follow and why we post the levels that we wrote. So like Wally will post the report every morning on this one of the Volt traders we follow called Spot Gamma, and he'll kind of post his viewpoint based on the option flows, what he thinks is going to happen, right? So I think he's been very dead on for the past month. He'll say like, hey, if we break the 4,500 level, we are going to accelerate down further, right? But if we regain the 4,600 level, we'll go back to positive gamma. So like positive gamma is which means dealers are going against their position, but it's a bullish tilt. It means everything goes slower. Slow movements is usually bullish.
Yeah. So if you don't know what gamma is, then pretty much gamma is the rate change for delta, right? Based on the stock price. So there is, like Paul said, there is a I guess the difference between a positive gamma and a negative gamma here. So if a dealer is in what you may call it negative gamma, they are short a position. So if they're in a long gamma, they are uh, positive gamma, right? So when Paul's talking about gamma hedging, it's simply when they're delta hedged, they're simply adjusting positions, right? They're either buying like shares, futures, or other options to hedge their position because they're constantly trying to come back to delta neutral, right? Which is what the previous slide was.
And you guys will notice that some of the levels that he posts that's dealing with OI and gamma levels, it actually is matching up with TAs and supply, and not supply. So supply and demand levels.
Yeah, it correlates a lot with supply demand and a lot with support resistance. So if you pay attention to Tria's room sometimes, he'll post his supply demand areas, and those correlate a lot with the delta. I mean, on the gamma levels. All right, so I did have an example here. Pretty much this was kind of taken from Spot Gamma's thing, and Mike's in here too. so yeah, I think everyone here understands kind of like a delta hedge, right? Already. Oh, I don't know who Tyson is, but all right, I'll just go over this. All right, so let's say
Man, you had to use my name to use loud.
let's say Mike Jones here buys
I'm just kidding.
100 contracts, right? 100 put contracts with a delta 50. So once he buys that, the market maker now has to short those positions, right? So the market maker has to short 100 put contracts, right? So when the market maker does that, it puts the market maker in a positive delta because Mike bought him. So now the market maker has a directional risk, and he has the delta hedge, right? So what the market maker will do next is they have to sell shares to hedge that position, right? So in this example here, he sold 5,000 shares because that's what he needed to bring his position back to delta neutral. So down here is just some strategies for the market makers to, well, not necessarily the market makers. I guess you could do this too, to just come back down to delta neutral. So, like I said earlier, you have that initial delta hedge, and then as the market fluctuates, right, because it moves up and down or whatever, the market maker has to adjust his position too, right? So the market maker, based on the stock price, has to either, in this example, cover his shares uh, when the price moves up, or buy more shares if the stock price moves down, right? Um, Once Mike closes his position or it expires, then the market maker pretty much has nothing else to do, right? Because he has no position to hedge. So that's kind of like the idea behind it. The market maker will have to gamma hedge based on his delta hedge too, as the stock moves up and down. Any questions on that?
You guys are pretty quiet.
The difference
You guys
between
even find this
delta,
useful
gamma?
to actually trade from though? So that's the thing though. So besides looking at the levels that they post up though, that's the only thing I use it for, right? Like you can try and take, like actually you don't really have to understand all this stuff, right?
You don't. You just
You
need
can
to.
you can always just take the levels that Wally has on his thing that he posts and just use those as levels within your trading in the intraday, right? And you can kind of see if those apply. And you can always correlate them to your TA and see how much they kind of line up. And most of the time it does line up.
Yeah. So you don't even really need to understand all that I just talked about. You just need to understand that if we're in a positive gamma, the market makers will hedge to suppress volatility, right? So they're going to start buying into dips and selling into the rallies. So when they do that, it causes a tighter range. So when we start talking about positive gamma, you want to like play smaller ranges and kind of like a mean reversion play, right? And then if we're in negative gamma, which we are now, right? The market makers will hedge to cause more volatility. That's why we're seeing a lot of these big moves. So they will sell into dips and then start buying into rallies. So when you start seeing negative gamma, you expect like larger directional plays. So that's like, for example, that's why I started uh, buying deeper in the money with my credit spread Friday, right? And I actually did good too, but last 10 minute killed me.
So
Anyways,
basically, yeah, so the levels that we watch usually, and it kind of worked for the past couple of weeks, is when it breaks the bold trigger. Like, you want to show the link of all the levels, Wally?
yeah, I have a slide right here. For
Yeah. So
example.
like when they break that volt trigger, what we know is every single time is like the volatility usually increases to the downside.
Yeah, so these are the levels generated by Spot Gamma, right, and their models. Um, like Paul said, you can just literally look at these levels and look at them as support resistance. Um, so the volt trigger here is the area where the market maker has to shift, right? So once it shifts from, let's say, positive to negative gamma, or vice versa, negative to positive gamma, the way the market maker plays is going to be a lot different, right? Because we talked about it in the previous slide where if it's positive, then the market makers are going to kind of like start to suppress, volatility. But if it's negative, then the market maker has to start playing um, differently, right? They're going to start hedging differently, um, which is why this volt trigger here itself is very important, right? Around this area right here. So if we are around this area and we can't get past it, then you have to expect the market to act like certain ways. So some of these other areas are more important too. I don't like. I personally don't care too much about the combo stuff, but the call wall is some important to look at because that's the largest positive gamma. So if you start seeing this wall shift uh, day after day, so as they shift higher, then it's a bullish sentiment, right? If it's just
Wait,
it starts to shift lower.
So Wally, call wall is that every day there's a level that you get that. Like, how did they come up with the call wall? Like, is it just a number, the random number they throw out there?
No,
It's not a
options.
random number. It's like they have like millions and millions and millions of data that they've like used and or to, I guess, test these levels, right? So they have their models that they run these numbers through, and they just generate it for us every day.
Oh,
So
I see.
it's based on the option data that change every day.
Yeah.
That they said, hey, based on all the option that calls that came in yesterday, market makers would fight it hard. So like like how they said like, hey, okay, 1100 Tesla, they'll go with it, but there's a max level where they won't allow to go past it. It can't go past it, price go there, but like call wall is like 47.96. They will they're getting to a point where it's pushing their book too much that they won't let it go further than that. You know what I mean? So a market maker can hedge as much as possible, but there's a limitation of how much money they can hedge, right? So
they have a lot of money.
they have a lot of money, but they don't have infinite money, right? They can't hedge forever, right? So there's theories, you guys can read about it, like last August, like when people were like squeezing certain mega tech stocks, where the calls kept on going higher and higher. They're just going with it, but there was a point where they couldn't hedge anymore. They just blew up their book and just sold everything off.
Oh. Yeah. Okay. Cool.
Everyone, there's different school of thoughts on that stuff, but we don't go that far beyond. I just look at these as some levels to be interested. I use my own. We use our usual, just like how we read price action, and just like these could be significant levels of something happening at. That's all I use for. So like I don't want to go too deeper than what it is. I'm like, hey, these are significant levels to trade against. Just watch them. So you have versus just using TA all the time, right?
Yeah, you can think of these as kind of like a, I guess, support to your TA.
Yeah, so these walls are pretty much like some resistance and kind of like supports.
Yeah, just think if you're under, if you're under is a resistance. If you're above it is a support.
Yeah, just think of it as resistance support.
Okay.
So I see some levels here that I pay attention to sometimes too, which is the spot gamma index level here. So it pretty much shows how much gamma is estimated to be in the indices, right? So if it's negative, then obviously they say that the market makers are in a negative gamma position, and we will see more volatility. And then I pay attention to their 1 day implied move here too. So that is their estimated move for the SPX for the day, which is right here. Usually they have like a range, kind of like the 5-day move here, but in this case they didn't. So you can also see that right down here. So this is specifically for the SPX. And then also the absolute gamma strike. This is the largest total gamma. I don't know why sometimes they don't.
So like if you guys look at TD uses it. So TD expected move. Yeah. I don't know. I believe TD's expected move is not based on option data. It's just based on averages, right? Is that correct? Or
I'm not sure. Like I'm not sure.
Does it? So Jimmy, you look at that all the time, right? So is TD's expected move? Do you know what they use to get that expected move in TD? Is that average, or is that like based on option positioning? Zong, do you know? Any of you guys know that? So what spot gamma uses is based on option pricing, right? That they say this is the max move for the indices. Man, you guys talk a lot than normal days. You guys are pretty quiet today.
I don't know. Like I don't know how they come up with.
Oh no. So I know spot gamma use the option pricing to get that expected move. I just don't know how TD, because I believe some of us use TD expected move too. So I'm just curious on how they compare to each other.
So this is last Friday. I just wanted to throw this in here. As you can see here, right? This is for ES. The volatility trigger was right here in the red. So my trade for this was I expected actually I was waiting for around 46.11 here to short, but we never got up there, so I got in late. But anyways, so I understood that we were in a negative gamma, and from that I actually that's why I went in deeper when when I sold my call credit spread too. And um here on this other level here, you can see that that was a large gamma level, and EES pretty much like rejected around this area right here, right? And then afterwards, it just freaking tanked. Where did it tank to? Freaking that 4,500 ish level right here. That's 4,500 on the SPX, but it's about 4,596 on the ES here. And then it just couldn't get past that. And guess what happened at the end of the day? Like base because the volatility was so high, because it was below the negative, because it is negative gamma, it pushed up like freaking what 40 points or something like that. And it took my credit spread out. So I actually lost money that day because I was greedy.
That's the reason why I short. So remember I told you guys when the market got the data and started pumping, right? So that's why I decided to short, because I knew the volatility the volatility trigger was there. So I put a stop above it. I said I'm gonna short this pump. If it goes over it, so be it. But I figured that volatility trigger was a hard resistance, so I took a gamble right there when I did that short. Right when I called it out pre-market. That's the reason. That's my reason why I shorted.
Yeah. So for me, I was gonna.
So what triggered you for that? What did you like? What was the signal?
So for me is like things like volatility trigger, call walls, and put walls, right? I don't know the direction of it, right? But I know there are. It's like sometimes when you reach good resistance level support, even in your TA, right? It's good risk reward.
Right.
For me is if it's getting close to it, I'm gonna try to play off that it's gonna reject it, right? I don't know how much. I didn't expect that big of a drop. I caught a, I got lucky, but I said, hey, if it goes over it, I have a stop above it. So
right.
that's why I decided to place that trade, right? That's all we can do, right? We can't. Anyone that says they know for sure the direction is just playing themselves, right? We play good levels of like, hey, we feel like it's getting too high calls. The shorting there is good risk reward, right? If it breaks this level, you just get out, right?
That's all it is, right? We don't know if it was gonna keep on going up.
So same thing with the 4,500 level, right? 4,500 level is a big break in for him to say, hey, like put acceleration will go higher, and it just happened to match up with the TA, right? With some of the stuff that we're playing 4,500, it's matching with spot gamma level. So for me, is like when I see these levels that he put in there, I won't trade until it gets to these levels, and I might put a counter trade. If it goes break beyond it, then I might go bullish, right? Because he says above the volatility trigger is positive gamma. Then you can reverse the trade saying you can also wait say, hey, if you break 4,600, go long, right?
But I play a lot of counter trades based on these levels here too.
So it's just risk reward, right? But I think I think that's a good gist of it. I think like if you guys want to go further in it, we have some videos we can post out. But I think it would be great if we can start talking to more specific trades that we think will be useful for this coming week. I don't know what you guys think. I have limited time, so I'm trying to. I want to pick your brains before I gotta get off.
Like 8:30 there.
Oh man, I traded at night though. I don't know.
Yeah,
Up to you guys. I don't want to interrupt you guys though.
All right, so why don't we just do what you guys do? Just look at SPY. Let's just figure out SPY might.
You say the last?
Are you cutting out really?
I said let's just figure out where SPY goes this week.
Yeah. So same levels hold for SPY, right? Like a lot of people saying if 4,500 break, dude, you got a short. Because that's a major break level, right? The inflection point is exactly at where it was 45.50, right? That's a major level in between, but we're in a big range where you can go either way.
So for the SPY levels, you have to look in the actual PDF that I usually put out in the morning. He lists it in here, but not in the smaller section.
But honestly though, let's talk about specific trade. What do you think is for tomorrow? For tomorrow, right?
Right. That's what.
Yeah.
What,
so like right now.
what's for tomorrow? Or we looking for the week?
Yeah. Like.
Yeah. You got
Oh,
a voice modulator or something?
Ken, you sound like you're talking to one of those like robot things.
I think you should check if you got a helium leak in your house.
Yeah, you sound like a little kid robot.
So if you guys just pay attention to these levels, for a while, you'll start to notice that they actually work. So the levels that we post every morning from these guys, they work. So if you start tracking it, you'll notice that they actually get rejected or a lot of rejections are at these levels.
So I don't know. So let's just brainstorm. What do you guys think is good trades for tomorrow? Right? Like I think most of us wait until the open, see which direction it goes, and we just kind of follow it, right? And sometimes you miss that. I think that's been some people's place, right?
Well, I only have one trade I'm looking at for this week, really.
So like I think so I think on QQQ or Nasdaq and on SPY, right? Dude,
Yep.
bouncing off the 50-day is pretty. If you look at it, we went 10 cents at the very end of close over the 50-day, right? We were below it, and like it rallied all the way to that level exactly, man. Like, is it a coincidence? Maybe, but I think it's too much of a coincidence to say anything. So it's hard to say, and the VIX is also very, very high. Like they're tracking the change in VIX. We have not seen VIX like go in this much change since COVID, like March of 2020. Like I know we're not getting drops like March of 2020. They're talking about VIX alone, right? The change of VIX has not gotten this like I'm not talking about the level of VIX. I think VIX went up to 80 something during that time. They're talking about percentage change of VIX has not been like this immediate on no news, right? I know we got the Omni variant. We can talk about what news is triggering it.
We hear you.
Oh, we can hear you now, Kane. Dude, I cannot take you seriously with that voice, man. Dude, someone needs to record his voice and play it back to King, man. No, but hey, your mic thing. Play around with the mic input. Are you using a
Sounds
special
like
mic?
a voice modulator.
You sound like that little microphone thing that you used as a kid. Yeah, but like, what do you think about that? So I've been doing out the money calls and puts.
I mean, with this
every single
volatility,
day.
yeah, you can.
Yeah, so like you get like for me is I think Strangles is a good play. One is it's low cost. Two is it's feasible because with the VIX being so high, like usually when you play out the money, it takes a lot of moves for you to kind of get in the money. But with the VIX being so high, it could get there, right?
Yeah.
So the risk reward, the risk is low, reward is high, and you don't pick the direction. Just play both sides and just the money's so small that if it all it has to do is a major move on one side, you get paid. Like I did that on Friday. I bought XPX calls and puts. I actually cashed out on both of them right at the open. Like I kept my puts, I cashed out my calls right away.
You're gonna have to take profit when you at least when you doubled it. When you,
Yeah.
if you're on the cost side, winning on the cost side, you need to at least cover your put side.
Yeah, so at least it break even.
Yeah.
So like once like you want to cover some so
trade and because I don't know how to do that.
You're cutting it out, but I think I got the gist of your questioning. So the thing is, what I did on Friday was I bought. So you want to buy it so it's equal. So I bought like the 4,500 puts on Friday. I believe I posted in Discord, right? It was a trade. Here, let me grab my screenshot because the trade's not the same anymore. So the trade was, it only cost me $22 to win $478. I believe most of you guys saw that trade, right?
That was your strangle?
Yeah, that was one side. So my put side was the 4,500 XPX, right? Right at open was only cost me 22 cents. But the thing is, it was a spread. I turned it into a spread. It was a spread. I did a put spread and a call spread. And it was so the risk reward was 22 cents to get 478, and I had the equal amount even on the call side. It was 22. It was like 25, I think, to buy like I believe four. It was like 5 strikes away. It was pretty far, Billy. So basically, you find like strikes, right? That's equal. That's like kind of like equal in price in each direction, right? And you kind of look at the risk reward of how it is. So it balances each out. That's really what a strangle is, right? It's kind of hard to do it when it's really volatile to pick the exact number. So you kind of just have to go with something you think is cheap in each direction and just kind of see if it's, what happens. I don't know, Zong, if you had any recommendation on how to pick strikes for strangle. For me, I was pricing it out. I was like, hey, this is low risk, this high reward. If it actually start going in one direction or the other, right? For me, is in this environment, I feel like any moves they're going to be a very violent move, but predicting the direction is very hard, right? We've been getting trend days or dump days, right? But the only way you lose that trade is if it does nothing, which hasn't happened, right? For over a week since Thanksgiving, we've been getting.
Yeah.
Sorry, man. Just talk.
Lost my voice
I was
right
about
now.
to leave anyways.
Sorry. But Billy, if you go on a 4-hour chart, you draw a trend line both on top and bottom.
I got it. Yep.
Yeah, you want to strangle down on the top and then you strangle. Not strangle.
Is there a way I can share
You want to pick your direction.
Yeah, I believe I just use the bolt trigger so I use 4,600 and 4,500 because I feel like those are like possible levels of support and resistance that I just went for. And the expected move that day was like right at the open was 1.8%. So it was within that range. So I picked something that's within that range that Spot Gamma posted out.
How can I share my screen?
Like the share screen?
On Zoom? Yeah, there's a share, the green button.
Share screen.
Yeah, there you go.
Okay, hold on. I'm gonna share this screen for you guys. Share. See what you guys see it?
Yeah.
Yeah, you're good.
That's how I play. That's what my play is.
What are you doing?
4-hour candle. Waiting for the breakout to follow here for the next leg down, unless it reverses to go up, which is our next high was this.
It's basically on an inflection point, right? It's sitting on
right. So we're sitting right at the 200 MA. So that's why I say it'd be nice if we could try to pick a direction here, because this move here is going to be the biggest move this coming week.
200 MA or EMA? Which MA are you using?
I'm using the 200 MA. This is the 200 MA on the 4-hour.
Oh, okay. You're not using daily. You're using intraday.
Right. So now this next move here off this 200 MA here is going to be a big jump one way or the other, because if these two MAs here cross, it's a death cross. We're falling down.
I still think for SPY probably 450 needs to break if you want to go to the downside.
Right, that's what I was thinking. That I was going to play 450 for the fall, and if you look at Apple, see Apple's there too. And if you look at the Apple puts for the 150 put for December 17th is huge.
Yeah, a lot of people loaded. They loaded super out the money.
Right. So I'm saying that if this move here with COVID happening this week, and this makes this huge move on the downside, because SPY's going to predict us here. If the SPY 4-hour breaks on this 200 MA, and Apple's the lagger, right? Apple's the lagger, and Apple breaks from here and breaks that 200 MA. That's a big profit this coming week.
Yeah, it could. It looks like a head and shoulders too, if you think about it, right there.
Yep.
So we'll see what the market does.
Right. That's what I say. If you guys, unless somebody, that's why I say it. That's why I want to understand the whole gamma thing. Is if there was a gamma something coming up this coming week.
No. So there's no option unpinning until the middle of
the 19th or something like that.
it's 17th, right? So the next major events is FOMC on the 14th and 15th. 15th is the major one. Then on the 17th, that's when option expire. Then on the 19th or 21st, VIX expires. So right now, there's no pinning. Right now, the market is loose. Go wherever it goes.
Right. So if we look at the Qs again, I'm sorry, we look at the Qs, because I was just drafting out the Qs too, just right before we started. That's what the levels I have for the Qs.
So, but here's the thing, Billy. You said 150 Apple has a lot of puts, right? But
Right.
man, I see lots of calls still.
Right, I see that too. As long as we break that.
Yeah.
Oh, way
yeah,
better.
sound better.
No, you sound good. 160 calls is huge. 165
Right.
is even big. 165 is even bigger, and there's still 170s and stuff too.
That's what I'm saying. If Apple's the lagger, right? So if Apple's the lagger and the Qs and the SPY falls, Apple should continue to fall with SPY and the Qs.
I agree.
Break the 400. If we break the 200 here.
I agree. I think Nasdaq's weak right now. Mm-hmm.
Yeah, it is.
Yeah, I agree with you though. You can't stay bearish. I agree with Kang on that. I think it.
Yep.
That's what they thought in a Friday was, right? Some covering already.
Oh yeah, that last 15 minutes was huge covering.
Mm-hmm.
Yeah, fuck that last 15 minutes.
I know that 15 minutes. Dude.
That shit
Hey.
killed my position. I got too greedy.
Me and John said buy calls. Mike heard it.
I know you guys. I didn't think it was gonna push up that much.
I mean, I said go back to VWAP, man. It's just a tendency, man. If you look at it, it went right back to VWAP. Half a percent up.
Yeah, but I think it might be rejected. I'm not sure if it's gonna break that 4 or 5 6.
It broke
level.
45.50 was that level that people worried about. It's 45.50, right?
Somebody's trying to come in.
Yeah, 45.50 was like a level that it kept on getting tested back and forth. But 45.50, 60 range, this is like all in the maybe range, right? Break over, we test 4,600. Break under, we'll test 4,500. Like I don't think there's a lot of
I think it's
alpha.
gonna. Yeah, I think it's gonna be in range. Like I think it's gonna be
Yeah.
between that.
I don't think there's a lot of alpha in playing this right now, like besides scalping. But right now, dude, Nasdaq looks kind of weak. If you guys noticed, the past 2 days, the Dow is less weaker than Nasdaq. Nasdaq had went up way higher and also went down way more in the past 2 days.
Yeah, and just look at all the indices, right? If you look at some of the stocks, right, they're dropping like crazy. I'm talking about like hundreds of dollars, not even just like the normal 30, 40, 50 bucks, right? All these stocks are dropping like I don't know, 10, 15, 20% in just the last week. Probably more, some of them, you know. So
45 to 50 overall for some.
Yeah, so it's crazy. So it's like you got to think like there's some sort of rotation going to happen, or they're expecting a bigger drop. That's how I see it when I look at the indices. If there's a lot of selling going on, then they're already preparing that, you know, hey, you might even go lower. Is it going to be this week? Maybe not. Is it going to be next week? I don't know, but just gotta be wary of that. That's why, like, just like what Paul was saying, maybe just the best thing is just scalp, you know, play the resistance support. But I can't say I'm going to be bullish and, you know, until like there's a bottom that we find. And I don't know if it's going to be 4,500 or we might even come lower.
I think if you see a big drop in the VIX, so if you look at every rally day we had, the VIX never dropped. Like it barely went down. Like you look at Thursday, right? We rally over 1%, 1.5 in the Qs or whatever. We still stayed at like high 20s for the VIX. That's something to kind of take a note of.
Yeah.
So
But,
usually when you have a big trend day, man, the VIX drops hard. So like usually the VIX people equate that to hedging. If the VIX is not going down, people aren't the cost of the premiums for some of these hedging is not getting cheaper.
mhm. Yeah. Just keep an eye on BTC also. Sometimes I look at that and that's kind of like an indicator for me too. If it tends to get a huge sell off, like let's say 3 a.m, then the next day, it tends to kind of follow with the market or two.
Okay. Anything else you guys want to go over?
Yeah, any questions? Yeah.
Mm. Gets rejected. VIX. Oh. Uh-huh. So Ken, you said that yellow line is the 200 or what is it? So I think it could reach there again, try to get there again, and it might just watch out for that. That would be the resistance, I would say. Yep. Mm-hmm. Yeah. Yeah, and also look at SPY on those gaps on when we gapped up the last month. I feel like we might even come all the way down to fill those gaps at 434, 435.
But be careful though. 80%. So stats wise, VIX fills the gap 100% of the time because it's volatile. But SPY only fills 80%.
Yeah.
So I agree with you.
Five.
Gap ups and
Yeah, daily.
The overnight, yeah. The,
I would
the
say-
overnight.
I would say I wouldn't long SPY until it pushes 460.39. It pushes that previous high. See that beautiful cross? That's a beautiful cross. Yep.
If for SPY, if I play SPY, I would look at 457 because if that's going to act as a resistance for SPY. If it stays below that, then obviously we're going to be back in negative gamma for SPY, right? So as we move above 457, you're going to start to get suppressed by the market makers. So unless there's like a lot of conviction to move past that 457, you're not going to get far, right?
No, but suppression is bullish though. So so usually when price does, so when we're positive gamma and price doesn't move a lot, it has a bullish tilt to it.
Yeah.
Because when you can't sell off hard, even if the price doesn't go up fast, people will buy the dips on those. Once they see like price action slow down and volatility slow down, you'll see buy the dippers.
So if we hold 457, then that would be bullish to the upside.
I would use 460. I would go higher.
Yeah, I go 460.
No,
I
I
go
said
for
457.
Yeah, but for me, yeah, like for me, as I say 460, but I think we all have different levels.
We have to break 460. I'm with the 460. We just have to break Friday's high.
I agree with that. If it breaks higher than 460, man, you definitely want to go.
At the
You
moment
want to go long, but I don't know.
long.
Yeah, I'll go long, but I don't know how big long I'll go. Like what King is saying, it could be a dead cat bounce to a volatile move back down, right?
I would take the moment it breaks 460.50. I would look to take profit at 464.
Yeah, I wouldn't be too. I wouldn't go strong long with a big position until two things meet my criteria. One is VIX starts slowing down and going back down, and two is I see the things that Mike was talking about. I want to see some recovery of some of the stocks. Right there's a lot of stocks that died so bad that never came back. but you still saw good stuff on Friday. We had a sell off, right? If you guys look at that the map thing, right, there was plenty of stocks green for the day, right?
mRNA.
Yeah, I'm not gonna count like vaccine. You'll see things like Procter and Gamble, Walmart, like some of the value stocks was up.
Yeah,
there's
mainly
some
value stocks. Like
yeah, you saw some growth. You saw some growth stocks too, right? Things that people felt was too oversold and had a catalyst, right? So Zong had Zillow, right? But there's also the other things the one thing that people kept on shorting that I noticed that won't die is the semis, right? Everyone wanted to short NVIDIA, I know. But you guys see Marvell? Marvell ripped 16%. Marvell is a semiconductor stock. And it went up 16%. So some people who trying to short like semiconductors, man, I would be careful.
No, yeah.
Like I don't know what. So I look at Market Watch all the time. That's why I posted the news for everyone. The FOMC is the 15th. Yeah. Well, I think Big's trying to get in. Is Big in? He said there's passwords for this
All you
thing.
gotta do is click the link. Yeah.
No, it's asking.
Well, the link has a password. If you look, BWD.
I think there's two links, right? I used Jimmy's link and it worked.
Yeah, Jimmy's link got me in. I didn't have to use a password.
It had a password in it.
Okay, that's probably why. But some of the good stocks that I would look at would be like MasterCard, Visa. They're getting a bid.
Yeah. I like MasterCard too, Mike. But what King is saying, right? Remember, it dropped down 10%, 5% on right before Thanksgiving. It got that little bid, then it dropped down again. So it's tricky.
Yeah. If you guys want Baba at IPO price, you may be able to get it soon.
Wait, what? What is it? Baba, dude. But I think Baba. If you look at the chart on 5 years ago, well, the 5-year chart I looked at, there's some gaps that it needs to fill around the 93 and 91 area.
I think it's too far. Like,
That's the FUD. Mm-hmm.
You can't use P. You can't use PE because PE is good for Baba and some stuff. But it missed earnings. There's plenty of things. It's not just Baba though. Some of these other stocks are kind of breaking down too. Even JD, a good one, is breaking down now. But there could be trades on it because I was talking to King a lot about how we could have leveraged on these big down moves, right? On Friday, right? Baba went down 10%. How could we did a trade on Friday to best leverage that day, right? No, yeah. So Baba, so the one trade I was so when you guys, so I'm not sure some of you guys aren't big option sellers or anything like that, right? So the one thing that we're thinking about doing on Friday was Baba. You want to show your chart on Baba? So I think Baba hit 108, right? Me and Kang were looking at selling puts. So you can sell puts, right? But the thing we're thinking about doing was selling a 0-date put, which is basically just for Friday. All you do is you pick a level that you think Bible won't get to. If it doesn't get to it, you collect most of the premium on it, right? And when you have big moves like this, the IV is very high. So things that is farther out the money becomes very easy. It becomes very highly like the premium goes up. So like I was looking at like the 95, right? And it had 50 cents on it. So basically you get 50 cents per contract to sell that contract. So Baba had to drop another 10% by Friday after making a 10% down move, right? Baba had to drop another 10% on Friday for you to lose that trade. So like that's what we're thinking on doing on Friday, and but we're kind of scared. Like, hey, can Baba do a 20% down day? Maybe. We could have did that into a put spread and limit our loss. You know what I mean? So let us know if you guys have questions on that. But that's some of the things that we're thinking to leverage some of the plays on some of these down moves, right? Take advantage of the IV. So let's talk about this. So King, I did research on this, right? So if you did the 1 week, right, selling puts on 1 week, you barely made any money. Like if you had to sell for $6.75, and at the end of the day, with a 1 week with the risk, you only made about 75 cents, maybe $1 on certain strikes, on the one that you're talking about. But the thing is, like, so this is the thing I don't like about selling puts, right? You really have, like, especially at 0 day, right? If you don't hit your strike, you're gonna lose, right? And you can't change your mind before expiration, right? When you sell puts, you would be taking a drawdown if it drops below where you are taking it. So it goes back to that one trade I was kind of talking about. Like, hey, if I bought 100 shares of Baba and sold a cover call on it right away, right? Say, hey, it was at 109. I buy at 109, sell a cover call at 110, right? Which was $2, right? My potential risk reward was I either collect the $2 where it stays at 109 to collecting 300, right? Where I'm getting $100 per, for the move itself, for that $1 move, right? So you can collect 300. So, but I have a $200 buffer as Baba go down. So Baba can drop another $2 before I really lose. That's the reason why I kind of like selling that cover call. But the thing is, like, when I sell a put, like I can't quit on the trade halfway through the trade. That's what I was trying to get at, King. Yeah. You get what I'm saying though? Like in the cover call, I won't make as much as sell put. Like selling put, I think if you're confident in it and you're fine with, you have to be really cool with assignment, and you really have to stick to the trade for it to be good. But if you're looking for scalping and a chicken way to get out, I think buying shares and selling that cover call just in case it might turn up, you can make money on it. Even though you might lose money on that selling that cover call, but you still will make money as the shares go up, right? So you kind of stick with it more. You get what I'm saying? It's a chicken way of doing it. Yeah, shorter term. Mm-hmm. Yeah. Or you don't want to take the drawdown where it might end up in the side. But I think selling the 90 puts too was going to net us 35 cents per contract. 90. But that we won't talk about it. That's hindsight trading. Okay, I'll let you guys talk about any other trade. I think I'm talking too much.
Z wanted to. He was asking about debit spreads. I guess King could talk about
It's capping, right? So like, credit spread is when you're so as a seller, you can sell calls or sell puts, right? But the thing is, like with selling puts, like I usually use when I'm selling like like a put spread, I cap it. So usually most time when you sell a put, most people want to get assignment. But if you're selling a put spread, I sell put spread if I'm scalping, right? And you're capping you're basically capping your downside. Same thing with with the other way, right? So when you're doing a spread as a seller, you're just capping your maximum loss. Same thing with a debit spread, right?
And
So
when you cap both sides.
yeah, you're you're really capping. A spread is capping your risk. You're capping your risk, also capping your maximum win, right? Do you understand between doing credit versus debit? Do we have to go into that topic, or are you just asking more? Are you asking more of a spread? Why do a spread? Like so unless I'm doing 0 date YOLOs, I will always, if I'm doing further up, I will always do a debit because it stops data. You don't have to worry about data.
See, I do the opposite, where I reverse and do a credit.
Yeah. But it's just
I'm counting on beta.
no, yeah. So I think most people in here are not sellers, Molly. I know we want to push for it.
Plus, I think if you do like a debit spread, right? If it's consolidating and theta is killing you, you probably are better off too versus somebody who's just naked. Like, for example, Friday, if somebody were to get in a debit spread instead of just naked puts like you guys during that whole couple hours of just dying from theta, they probably, whoever was in that debit spread probably would have made out a little better.
It really depends though. So like on Friday I actually did a debit spread. So like on Friday right at the open, the first thing I did was I bought so if you guys saw my trade, I did a put spread, right? So I did a debit spread. So debit spread means I buy in the money, sell out the money, sell something that's further strike out, right? So I bought a 4,500 XPX. Yeah, so I bought a 4,500. Then I sold the one strike down, but I didn't do it right away. So so at the very top when SPY was at that 460 something, I bought a naked put right away, but I wasn't sure, right? On the next dip down, I turned it into a spread because I wasn't sure if I was going to get killed on theta, if it was going to chop. So I just bought the other leg of it. So the other good thing about having a spread too is it gives you the freedom of playing both sides, and you can always let go of the winning leg to play the rest of it, right? So you can turn a trade that is like going opposite your direction into a winning trade. I'm not sure if that makes sense. You guys follow?
Yeah, I've done that. Like,
No, I know you guys. I know Waller. You know, I'm just whoever is asking the question. Z, right?
yeah, so that's definitely. If I would have done that Friday, I would have been good.
I actually capped down, but the thing is, I wish mine was naked because my 40 like it dropped so hard. I really capped I capped my
Your profit.
I capped my profit big time because it ended up going to 4,500. My the drop was so huge, I would have made like 5,000% at the end of the day, but I capped it. And Kane was asking me why didn't I let go of my other leg. It was so fast. Like I was using it as insurance, and I couldn't let it go. I didn't expect it to go.
So
So
that's spread.
it's
Yeah.
like, oh yeah, yeah.
Yeah, I suggest you hop on Thinkorswim and use their on-demand feature. That way you can mess around with the spread. Because that's how I learned. I started just messing around with spreads on Thinkorswim's on-demand. And then you kind of like, let's say, do a spread, right? And then just fast forward some time, and that way you can see how like it's playing out.
I think you should. I think a lot of people when they price out options, they're not looking at where it becomes profitable, like a chart based on date and time, right? Like there's some so like I think we went over on Friday with a few people, right? Some experienced people with options, right? They didn't so like they were asking us like, hey, if something is too high, why don't I just buy a long dated out the money put? Like for example, if I think Moderna is too high, right, and I want to short Moderna, they're like, why don't I just buy something that's out in February and out the money puts on Moderna, right? And we're trying. Then we start showing. A lot of people don't realize like there's a lot of tools out there. Even TD has it. It'll show you like based on dates and where the price has to get to for you to be profitable. I think if you guys look at Friday's Discord, you can kind of see some of the charts that we're posting to each other. That I was posting to see that hey, this is where your profits are, right? I really suggest people to start like placing their options within those charts to kind of see that hey, this is where I need to get to make this trade profitable, right? Just say, hey, you think Moderna is going to go back to 200, right? Like the example we gave was, hey, why don't I just buy a February 180 put, right? That's what we're trying to show Mike and John, right? If you buy a 180 put, say in the January, yeah, like because a lot of people are being bearish, right? They're like, hey, why don't I just buy this thing? We're trying to show that, hey, where does this trade price have to get to by which date for this to be a profitable trade? the assumption they have here is IV stays the same, right? So if IV starts going down, your trade is going to start going against you. You can also use tools. I don't. Does TD shows table? So this might not be visual. Here, let me share my screen for a second. Okay. Do you guys see this? So this is what I posted to the team on Friday, right? Am I showing my the Moderna chart? What are you guys seeing right now?
Yeah, I see.
Okay. So this chart. So you guys can use there's option tools out there that you guys can see. Like this might be easier visual to say, hey, okay, this is basically saying, hey, if I did a 180 put, this is actually is a spread, right? I said I'll buy 180 put, sell the 170. This is showing you, hey, by middle December, if the price is 273, I'll be up $12. But that means Moderna had to drop 8% for you just to make $12 off this trade. So like you can use tools like this to kind of visualize it, right? But what the point what we're trying to show is like, hey, even Moderna drops hard, but the thing is, if it doesn't drop hard immediately, you'll be in a losing trade. Just like, hey, by middle of January, even if Moderna drops 15%, you might be at a loss with this trade. Stuff like that. And with these tools, you can change the IV, right? But it's hard to tell if the IV is going to go up and down. IV changes based on how much option action it's getting, right? More people betting out the money, that's when IV goes up. It's kind of hard to guess, so I just keep it the same. But I like you can use that chart that King shows you, or if you're more of a table person, I use these kind of things to say, hey,
Where's this chart at? Where do you get this chart at?
so I'll send out the link of the tools I use. So yeah, I use option profit. Yeah, I use option profit and option strat. So you can use those tools and it will price out things for you. So it so this helps you say, hey, if I bought that put, right? Like if the put stays the same price, right? Say it stays at 307, right? This is how much I'm losing per day, right? Stuff like that. So I think that makes it easier for people to kind of calculate out what they're losing theta. But the assumption here is IV stays the same. So when you're using this for earnings, I'll be careful, right? IV always drops after earnings. That's my only comment on that. Let me know if you guys have any questions on that. uh,
Yeah, because
depends on how.
you can get the direction right, and you'll get crushed by the IV. But you'll still lose money.
So
Yeah.
yeah, it's if IV drops, right? So we do buy when IV is high for scalps, right? Intraday, right? Like Friday, right? IV wasn't dropping, right? But like if you're doing something like earnings, after an earnings thing, IV always drops. So like I wouldn't buy straight puts or calls for earnings the day of. If you're gonna do it, you gotta buy when it's low IV, like 2 weeks to a month ahead of time, right? Or you make a spread. But you can buy when high IV, right? Like we still like I think like Zong bought Moderna puts on Thursday, Wednesday, whatever, and Moderna is always high IV. Like if you're buying it just kind of intraday trade, you can, right?
Yep.
Any other questions anyone has?
Can you guys hear me? Doesn't low IV mean like the prices aren't gonna move as fast compared to like when I'm scalping Tesla, premiums are like moving constantly. Is that caused by high IV?
The premiums is based on what people are betting, right?
Yeah.
So the premiums go up more when more people bet on it, right? So the more people buy out so IV moves based on how much how much action you're getting in the option. So
Okay.
the more out the money options that people are buying, it jacks up the IV higher. Then the premium costs more. Like it's basically the more people want those options, the more expensive they get. Even if the price aren't moving, just say, hey, Tesla stays at 1100, right? But if a lot of people buy 1200 calls, right? They will start jacking that price up, and IV starts going up because they got to cover themselves if the option goes up. The market makers need to cover themselves if it goes in that direction, right? So they want to start charging more for that implied move because too many people are positioned that way.
Oh, I see. Okay.
So like sometimes like sometimes you can see that, right? Like even if the price doesn't move, but a lot of people are buying those options, your contract can just go up. Just due to the higher IV prices, right? But sometimes that goes against you, right? So a lot of people buy options right at the open, but at the open, some of us are sellers. We tend to sell right at the open because that's when IV tends to be the highest because everyone's trying to buy at that time, right? So when you buy at that time and IV is high, you better get the direction right because you get the direction wrong, you're gonna get killed.
Yeah, all right.
You can scalp it. Anything else? Anything else you guys want to cover?
Hey, you guys should join us in voice chat in the morning because I'm tired of Paul talking all the time.
Freaking Wally.
Ignore when some of us fight in there because we get bored and we fight. But but the thing is, like, when news, so some of us have subscription to certain outlets for news. So when it happens, we call it out in chat, but we don't always. Once we get the news, we're trying to make a trade on it, right? We don't always post it in the Discord. Like, for example, right, on Thursday when we got the news that, hey, they're going to do delisting of like Chinese stocks, some of us got into puts right away for Chinese stocks, right there. Some of us held it into Friday, but like we're able to catch that trade just due to the news right away when it broke out on Thursday. Stuff like that. Like, we don't always post it out, so we kind of share it on the chat sometimes. So one advantage to be on the chat. Zong's back.
Yeah, Z, if you got more questions, just keep asking.
Hey, Zong, you back this week? Are you building a roof still?
I'm halfway finished, but I'll probably be back.
Oh yeah,
I think Zong was not 100%. Were you 100% last week on all your trades?
No. Friday I had some lottos touchdown. Remember the
You
460 lottos? Yeah.
Hey, Z said, can you guys explain the flow and the alerts on the Discord?
yeah. So that's my bot I created. So the flow is filtered to like a certain amount of stocks, and it has to reach like a certain amount of a price for it to come through because otherwise there'll be so much. But pretty much I scraped it from a service that I pay for, and I'm just sharing it in there. That's all it is. And for flow, you just don't want to like uh, follow it as you see it come through, because if you look at some of the flow in there and you go back and compare to the chart, sometimes it is actually the inverse of what's going on, right? The alerts is pretty much a once the flow comes through to like to hit like a certain amount. So there's like a threshold for the alerts. Once it hits that threshold, then the alerts get sent out. But that's not my threshold. That's the services. I just kind of like throw it in here that way I can see it. But yeah, don't follow them blindly. I've been hit by them before, like plenty of times. So you want to actually look at it and then go back to the chart if it's a good play for you. But if you start seeing them come through a lot, then there's definitely a higher chance that it will work out.
What about what about the position size? Like, like you're saying, like, let's say Apple call 160, like 9.8 million or something like that,
So what
or
that
is
means,
that still
so
not? Yeah.
if you look at the let me share my screen. Oops. You guys. All right, so if you look at the alerts here, you see like Apple here or Amazon here, right? So let's
Mhm.
look at Apple. So for this flow itself, it had to meet the minimum amount I put in, which was like 50,000, I think, and then I let it come through the bot. But anyways, so this position tells you that somebody out there spent $60,000 on this call position, right? And the details here is they bought 212 contracts at $2.84 each, right? So the type here is sweep. The only thing I let in here is sweep. There's another type too, but sweep is pretty much, you could think of sweep as a market order because they pretty much put this order in to just like flood the exchanges because they want this that bad, right? So the strike for that contract is what this is, and the stock price at the time of when they bought, and then expiration, the time, and I need to get rid of this because it kills this bot sometimes. That's what it is. Then you start seeing some details here. You see a B here or an A, or maybe a AA or BB too. So what that means is it's at the bid. They got this at the bid or below the bid or at the ask or above the ask. So if you see a position here that comes through as a, let's say like Amazon here, right? You see it as it comes in as a call, but it could possibly be a bearish flow right here, right? So I kind of put this little icon here saying bearish flow because usually when you start seeing flow come through on the bid side like this, especially for the call, that could possibly mean that they're closing or selling positions, right? And then the vice versa for ask. Let's see if I can find one. Put. Oh, here it is. So for this one, it's a put position, but it's on the bid side. So since this is a put position on the bid side, this possibly could be more of a bullish position. So they could possibly be closing these contracts that they previously had, or they're selling these contracts. So this isn't always the case, right? Because maybe they're doing spreads too. We don't know. But this is I'm just like very generalizing this.
I see.
And then
That helps.
alerts is like I said, once it meets a certain threshold, they send out the alert. So for example, this Microsoft alert could have been from like a bunch of Microsoft flow that came through, and it triggered this alert. And then this is the alert I pulled. Any other questions? Oh, aren't we limited to that? So that bot is actually the source code is open. So if you guys are programmers and want to help out or whatever, it's all like where is it? I have Juanita girl. It's here. You have to ask me how to set it up because I I have kind of like a local thing running. It's harder to do because you have to have pretty much a subscription to access some of the live data. But source code is all here. So you have Juanita girl. I'm somewhat lazy at this, but I was kind of like looking at refactoring like a lot of this stuff because I put this all together in like maybe a few weeks. Um, and then this is the main program here, Juanita girl, and you have another one, Bad Bug, which actually does a lot of the work. And then oh, I did have the secret charts here, but I couldn't get it to work. It kept on dying on me. Sometimes so it was working, but it kept on killing Juanita girl sometimes. So I gave up on it for now. But this was the one where it was doing all the screenshots. So every time flow would come in, it would use this uh, other code to actually do the screenshots. And then this bad bug here is more of just a code for actually pulling the data. So this is all JavaScript stuff. So if you know JavaScript, cool.
And also for the new people that probably are just on here for the meeting. If you guys are in the Discord group, under the tab that says flows and alerts, that's where you see the flows, like you see the put options or the calls coming in, and then you can kind of look at it to see kind of, it gives you kind of like a general like sense of what people are kind of like playing. But it's not to say that the market's going to do exactly what they're doing, their put or their calls are doing, but you can kind of follow like where all the money's going. And then when you see like a lot of alerts, let's just say like last week, right? Apple calls were coming in like crazy. Then it gives you a sense like, okay, maybe they're going to push it up or something like that. But it's still, you're still having to do risk management on your own. When you're in a position and you followed, like, let's say the alerts, you have to manage like, where you're going to exit. And if it drops to a certain point, you still have to get out.
Cause yeah, do your own risk, but some of these things you don't know if they have other existing positions, and so like like for example, they buy a put or something like that. They could be doing a collar on a long position, right? They could be bullish, right? But they might be adding another leg to their trade, so you don't know what they're doing, right?
Mm-hmm.
Plus, just because it comes through doesn't mean that it's like a good trade. Because, for example, like I have this other room called Golden Sweeps, and I get Tesla all the time in here because the way I set it up is like it has to be over $1 million and within the last 30 days, right? So these are my Golden Sweep rules, and you see Tesla all the time because freaking Tesla is always over $1 million. But once in a while, you'll see something like, SE here. You don't really see SE. Like this is, totally different here, right? For 1.2 million, they're either like selling here or closing out previous positions. We don't know, but this is a room I pay attention to too.
Yo, why can't I see the alerts and flows in my Discord?
What's your username? Oh, you have to. I set it to where you have to be at least a newbie. So whatever
Oh, okay.
think
So
you
what's
have
that?
to. I don't know.
We're all newbies. I'm still
Whatever
a newbie.
because there's so many. Yeah,
Okay.
Okay.
yeah.
So
I got a
leveling up. How do you level up?
This
So like type, right? Type
Okay,
out,
okay.
chat with us.
Yeah, just for joining this, just level him up so you can see the flows.
I did this that way random like people just don't hop in.
Yeah, we don't want other.
This is
There's a.
I pay for, and I really shouldn't be doing this, but I threw it in here just for, I'll say, my personal benefit. Yeah, whatever that is.
Did you tell him that when we're
You
on
should
the?
see it now, Tyson.
He's
Yeah.
a newbie now.
Hey, did you tell him that on the voice chat that Zong has a scanner on there?
Oh, yeah,
you
Zong
can,
has an annoying scanner too in trading chat here that I never.
so you get an audio version of the scanner, so you don't have to look at these. You can just hear what's coming in on if you join us on the trading chat in the during the day. Yeah, like
you guys are on call every morning, huh?
Yeah, I think there's a core of us that on every day. I'm definitely on there.
We're like in and out depending on what we do. But most of us.
Okay.
You get the bum IT people. The bum IT people double trip.
Okay.
Every day.
Well,
Wrong.
Jimmy, Mike,
Give me the bum. Yeah.
Mike is always around. He just doesn't want to join us on voice chat sometimes because he's trading at 3 a.m. California time. Yeah, but definitely the scanner, audio scanner, is easier to hear it versus looking because you can verify on the chart at the same time when you hear something coming in. Like on Friday, right? Like when Zong didn't turn on his scanner, but I had my scanner. I saw Baba puts and Neo puts. I called it out right away. I'm like, dude, you guys short Chinese stocks at the open because I saw Baba hitting the flows like crazy. And I think a couple people caught that trade. Yeah, I was too slow. I was too busy shorting XPX, and I believe Big Minion and some other people caught that trade. Congrats.
Yeah, he's a ninja trader.
Yeah, and so I think he's a ninja trader. He got to start sharing his trade with us. I know. I'm talking about it. I'm talking about a trade, and Big goes in there right away. I'm like, what? Share me your trades, Big. Share your trades, Big. I want to get some money from you, man.
All right, guys. I think that's it for me. It's been almost 2 hours.
Sunday stock nights. It's up to Zong. I think this is the first one in a long time that we had, just
Yeah, I
based
mean, if
on
you guys
popular
want it,
demand.
yeah. Yeah, if we do, just request in Discord, and then we'll set it up.
Yeah, definitely give recommendations. If you think like Jimmy and I are fighting too much on there, let us know. Tell Jimmy to shut up sometimes.
All right. See you guys tomorrow.
Thank you. Thank
All
you
right,
guys. I'm
gentlemen.
gonna
Thanks, everybody.
It's like me, y'all.
I want
See you guys in the morning.